The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 14th. It is Flag Day, folks, so be out there flying your flag. It's also Terrific Tuesday. And so welcome to the Terrific Tuesday edition of the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call on in. Now is not too soon. 877-927-6648 internationally, 727-445-1044. So let's go ahead and get this show started on, of course, terrific Flag Day Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading down 73 points at 17,660. The S&P is off about 8 points. That's trading now at 2071. The composite down 17 at 4832. Russell down 6 points at 1144. DAX closed down 138 points. FTSE down 121. Gold is back a buck. Silver's off 5 pennies. Light sweet crude back 50 cents, trading at 48.37. To the upside, leading the charge, it is Stella. It's actually Constellation Brands Inc. You know, they want Stella is just one of their beers that they have, one of the many fine beers as well. That is up about $5, about 3%. You've also got MSA Safety down up 5%, 260. Alibaba, that's up 3.5%, 250. Panera Bread, its loaf is rising up $2.25. That's a little over 1% to the upside. Humana's up a couple of bucks. Motor Car Parts America up 7%. That is $2 to the upside. To the downside, individual stock-wise, you've got Priceline off $3. Lending Tree down 777. Hey, the one-armed bandit is alive and well on Stevie's screen out here. You've got Alliance Data Systems off about 5. AutoZone down about 5. Intercept Pharmaceuticals off $4. I see the Nugget. Gold miners are getting hit today. So interesting. We'll take a look at that because certainly, gold's only back a buck out here. And silver barely, pretty much almost unchanged out there. But we won't begin our day there. Instead, let's begin our day. Where should we begin our day? Let's go take a look at the Dowie. The Dowie. How about that? The Dowie Llama. If we take a look at the Dow, here's what we've got going on right now. Let's get rid of the volume bars. Let's get rid of those TAS profiles and clean up the chart just a tad out here because both of those are insignificant to us at the moment. So we take a look. Here's what we know about the Dow. We know that it has been since 2050. Well, it was traveling in a descending price channel. That began at the highs back in 2015. We know that price got above those highs back in March of 2016. Once that was truly a change in trend out there. Price comes back, tests that area in the late May, third week in May out here. Totally rejects that on May 24th, moving higher. Looks like we've got price potentially coming back to test that level, or perhaps it is this little rising price channel. On the rising price channel, that green line, really there's no connection of the dots out here. That one's based really upon the this little topping area, the top green line out here. But at this stage of the game, if we take a look at retracements that have occurred thus far, let's go from low to high. Of course, that's how we would do it. It's retracing, right? So from low to high out here, what we'll see is that the Dow is basically done a 0.618 retracement as we speak, 17,587. What's it mean to do a 0.618 retracement? Normal. It means it's kind of normal breathing. Of course, this kind of breathing is one where it was working out so fast that it's done it in just a few short trading sessions out here. So, speed-wise, it's moved back. If it breaks through the 17,587 level, suggests that price is going to come all the way back and at least test the top of May 19th. Inside of the Dow, that would be 17,514. But we are at a level that oftentimes acts as the C point of an A to B equals CD. In this case, this would be to the upside. Is that what I expect to happen? The answer is yes. Unequivocally? Yeah, I'll go with unequivocally yes as we speak just yet, until the market reveals other information to us. Let's take a look at the S&P 500. Let's go see what it also is doing out here. Now, I didn't say go long just yet, but I did give you what I believe the outlook, the accurate outlook is inside of the Dow. If we go take a look at the S&P 500 out here, S&P 500, let's go from its hammer candle. Now, that's going to be an important candle. That's that trading session from May 19th out here. From that low to the high out here from just a few days ago, you can see it too has basically made about a 0.618 retracement. 2062 would have been that number out here. And so far, the intra-session low is 2064. Close enough. And it's also prices moving into, I believe, volume. We'll go take a look at the SPYs and confirm that. But I believe on that May 24th level, inside of the SPYs out there, that was moving up with some pretty decent volume. But let's not go from memory. It's a nice-looking candle, but let's not go from memory. We'll actually go take a look at that. With that, let's just do it right now. The heck with it. Well, not the heck with it, but let's just go do it right now. So here, if we take a look at the SPYs, now we're going to go and add back, actually, our volume bars as well as our market profiles. But we'll do the volume bars first out here. So here's the session, right? May 24th, 95 million shares to the upside. You've done 69 million so far to the downside. Now, if I were to do the straight line math on that, that says you're actually moving back with volume, 123 million or so to the downside, potentially going into 93. So what does that say? That says to me that, there's no reason, volume-wise, for price to stop in its tracks. However, you've got that little rising trend line. So price is right now below that rising trend line. We took a look at that green line out there. In fact, if you see the real trigger point, well, the real trigger point is going to be the oscillator unchanged line, which is part of the workshop that I'm doing tonight. But I don't have that on the screen. It's on another other charting application that I utilize because I custom built that indicator. And but on this chart here, I'd also say if it gets back above that trend line, that's a green line coming off of the high. It's high from back in May of 2015. You get back above it, anytime soon, then it's off to the races, back to the highs, to the upside. We already know the retracement is about 0.618 retracement, but volume is a bit heavy. We'll see how it ends the day. What's the level that you want to be watching out here? I wish I could give you the exact price level. I would have to say you're right around the 208-ish area. Anything above that, and you've at least found support at the rising trend channel. Let's take a look at the TAS market profiles out here. What do we have inside the SPYs? Well, you've got a brand new weekly that formed yesterday out here. That weekly, by the way, well, let's do this. We've gone through this exercise before, and because it's an important exercise, so let's go take a look at the meaning of the weekly profile out here. Of course, the easiest way to do that is to turn off the daily, so we're doing that. So you've got a brand new weekly that formed, and where did that weekly profile form? That formed above the prior weekly profile out here. That says at 203.75 should be good support. Price right now trading at about that 206.68. This S&P, the SPYs, may have actually found some support out here, but we'll continue to look at these charts. Anything else that you'd like as well, just give me a call at 877-927-6648. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 91. S&P is down 10 points. So let's go take a look at what the markets are doing out here, because they've gotten to a oversold status. And in very quick fashion out here, let me do this. So here is our chart of the New York Stock Exchange with a number of different indicators on the bottom panel. And obviously, you're going to see green, red, and white lines out there. You know, it's Flag Day. You got to have these colors in order to be able to show different things out here. But let's go take a look at what we know as we speak right now. So let's do this. I'll turn some of these tools on and off one at a time. That way we have some nice screen space out here. Let's start with, we'll turn off the advanced decline line. Let's turn off the new highs, new lows. There we go. And we're just going to leave this set here with the actual advanced decline oscillator. Now, what you can see, if you're watching this on TigerTV, you can do it two different ways. In the data box, which is in the upper right-hand corner of my screen, you can see the letters OSC. And then you'll see minus 196.64. You can also see it at the bottom of my screen off to the right axis where it gives you that actual reading. Now, you're going to see three yellow lines at the bottom of that screen. In fact, why don't I go ahead and just blow that up for you a bit so you can take a look at this. Now it's going to make it easier. So we've got price on the upper right-hand side of the screen. Don't worry about the green, red, or white diagonal lines there. What I want you to take a look at is the solid line, the zero line on there. That's our line of demarcation. That's our line of demarcation that gives us a clue as to whether it is buyers or sellers that are in control. I don't want to really use, bulls or bears out there. Sometimes can be misconstrued. Just who's the one, this is a football game. This is about moving the ball up and down the field. That's all that it is. And I just simply want to be able to teach you to be the best coach that you can be by being able to read the plays and understand what the market is doing. That way you can go ahead and make your next call for your team out here. So it's a great set of indicators to let us know who's got the ball, where they're at, when they're running out of energy, and so that you can anticipate and pay attention. Now, when you get up to the dash lines, those big, large, solid dash lines, plus 150, minus 150, those are the levels that will identify for the New York Stock Exchange oversold or overbought conditions. Now, inside the New York Stock Exchange, it went from a oversold condition that began on May 19th. I'm just referring to the most recent one. You can see that the reading got down to minus 203.92. So because it's at 196 doesn't mean it stops on a dime. Says that this is where we're at right now. This is where we're getting to. We're inside that oversold territory. So what does that mean? Well, it really depends on the type of time frame trader that you are, what you were anticipating, stops. Let's just take a look at what it does mean, and you decide what action, if any, it is that you're going to take, and then what you're going to look for. So May 19th, from May 19th, I don't know the exact number of trading sessions. We can count them: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trading sessions. It took 2 weeks, but really more than that, 14 trading sessions to get from the low that established the oversold condition to, you'll see the reading in the upper right-hand corner says 150.80. 150 is that line of demarcation that says you are now overbought. Newsletter subscribers knew that the very next morning that the market was overbought. We talked about how this is the point where no matter how bullish the market was with regard to all the indicators, you've got to anticipate that the market is going to pull back. And in fact, that's what it began doing the very next trading session. Now, in a period of 4 days, in a quick fashion, the market has gone from overbought to oversold. If you go take a look at other times when the market got down into these levels out here, and they didn't make it quite to the 150 back on February 11th. Pretty key session out there, right? Pretty key session to make a bottom. That was a test of a prior swing point out here. You can see that reading was minus 135. But anytime you get into this general area out here, minus 136 back on April the 7th. Again, if you just take it up, we don't have any kind of reversal, not anything out here, and take a look at the New York Stock Exchange that says that this is it, this is the bottom, this time that there's going to be bounce from here. But folks, this is what the market, this is the football game. The trend, you can say, to a certain extent, the trend line is broken. I would still venture to say that the trend is still to the upside. We haven't even taken out a swing point to the downside. That would be at least a minimum requirement, which happens to be that trading session from May 19th. Now, that's just take a look at the advanced decline oscillator out there. What else do we, that was the, let's take a look at the advanced decline line. What do we know about the advanced decline line? Well, the interesting thing here with regard to this, and you can take a look at the diagonal green and some of the red lines out here. This is just showing us a trend line with regard to just the advanced decline issues, a summation index, right? It's just a summation. We just keep adding, to it, to yesterday's total, which was a summary of all the prior days from the point in time which we began. We just add to it today's net totals out here. And right now, price is right on that line. It's below it inside the price area of the chart, and it's just slightly below it inside that advanced decline line. Now, being below there is not a good thing. Well, it's going to all depend on where today's session closes. You break that, then that says to me that price will come down and probably test that May 19th level, somewhere between 10,119 and 10,209. But remember, the market, the New York Stock Exchange is in clearly an oversold condition. It can continue to get a little bit more oversold, but that rubber band, where is that rubber band? I think I got a rubber band. I always have a rubber band, right? This rubber band, this one right here, I don't even know if you can see it, but if you can, this rubber band is getting ready to snap. That's the way that these markets work. If we go ahead and we take a look at new highs, here's new highs. Here's New York Stock Exchange new highs. You can see that unlike the top that formed back here in May of 2015, the new highs were establishing no new highs. They had a declining tops move into that level. Now, we haven't gotten to all-time highs out here back inside the New York Stock Exchange, but as prices were rising, as they did, we made a high back here on April 20th, then another high on April 27th, and even higher high out here as it got to that overbought condition on June the 8th, and the advance and the actual new highs out there was also making higher highs. So that's not a bearish divergence whatsoever. It's a bullish. It's a bullish case. We'll see how that actually plays out here. If we go take a look at, and I've got new highs, I've got new lows, so let's go take a look at our new lows indicator out here. Basically nada, 42 issues of that, I don't know, the 2,800 or so are at new 52-week all-time lows. Now, major bottoms get formed, as you can see here, when you see huge spikes. back at the lows in August 24th, as an example, New York Stock Exchange, new 52-week lows got down to a reading of 1,342 out there. Back at the lows out here in the January timeframe, January 19th, the 20th, you saw that reading get down to, what was it, 1391? Yeah, 1391 out here. So, but those are what form some major bottom type patterns up at the highs, right? You're looking, and we're not dealing with that at this stage. We're not dealing with any kind of major sell-off. So really, what's important to us is not. I just thought I'd share it with you for the blanks and giggles out here. What's more important to us is, hey, what's going on with regard to happening at the highs out here? So that's the New York Stock Exchange. Oh, that's a beautiful looking chart. Thank you for sharing that with us. So we'll go back. We'll take a look at it. What else can we see inside of the marketplace? We probably should go take a look at light sweet crude. That was trading back. That's trading down 54 cents, 48.33. Let's go see what it's trading into when we get back from this break. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Dow's off about 100 points. S&P is down 11. And as we check in on light sweet crude, we're taking a look at the July contract out here. Let's turn off the price on this chart. Give me uno momento, por favor, out here. So what we can see is that light sweet crude here, still in a nice little rising trend line out here. So it's still the bias is certainly to the upside. Has not taken out a swing point to the downside. That first swing point is really what it's trading into, which is June 1st. So the level that one wants to be watching, paying attention to, is 47.75. We've seen price get down to a low of 48.02, so very close. But you can see on the way down right now, we can see that price is in fact right at support. It's right at support of the daily profile. Let's go ahead and show you what that looks like. So this is going to be the blue horizontal lines on my screen out here. Now we know that this profile, the bias within inside this box, which is between 48.14 and 49.71, the bias was to the downside. Sellers once price got inside there. Now at this stage, we don't know, is it buyers or sellers that are in control. If somebody was looking to buy light sweet crude, this is where your back is up against the wall. This is where you'd want to do it. Now, what you also have going for yourself out here is prices also right at the center of the weekly box. Let's turn off the daily profiles. And you can see that price is right at the center of that daily box. Now, pretty much the center of that box is equidistant. So this box here doesn't give a bias to one side or the other. So what this communicates to you and I is if you see light sweet crude first get back below this most recent swing point of June 1st, which would also mean the daily profile would have failed. I'm not saying tested. I'm saying close below 47.75. Then you'd also be below that weekly point of control at 48.11. That would say price ought to get down to 45.73. Otherwise, price is up against support. Now, why do you want to be paying attention to this? Because of the correlation that still exists between light sweet crude and the market. So in trying to put this together, you want to figure out what is it that I'm looking for next. You're looking for information. At this stage of the game, the market is absolutely in a short-term downtrend. It's entered oversold territory out here. So now what are the things that are going to be able to trigger it to the upside or continue to move it to the downside? I would venture to say light sweet crude would be one of those things. Volume, most certainly, but light sweet crude would be one of those things that you want to be paying attention to. What else should we look at here? If there was any one trade that you would want to be putting on right now, I would say it would be to go short the volatility index out there. But I hate those volatility index exchange traded notes. I don't even want to use the word, but if you were an aggressive trader, then that is the rock you want to be looking underneath, because that is going to be pulling back. Whether today was the high or not, I'm uncertain, but that is the place that probably you will see the biggest percentage gain rapidly, and that is especially if we do see this at least short-term bottom. I think it's going to be more than just a little short-term bottom out there. Now, we ought to go take a look at what's going on inside of the world of Goldilocks out here, because you've got the GDX. It's down 51 cents, 32 million shares. So let's go see what it's doing volume-wise out here. And the GDX. Well, let's get the volume out here. If we're going to see what it's doing, you got to actually turn it on. Hello, is anybody home? There we go. So you got the GDX. You got 33 million shares as we speak right now. And this most recently broke out with 98 million shares. So you got to like the volume setup. I don't even have to have a calculator to do that kind of math to know that it's pulling back with light volume. However, if this were to close below, and it would be subtle, give me a second here. If this were to close below the price point of 25.44, a level of support, I don't care volume or not, will have failed. The first level of support will have failed because it will have repaired that window out there. As we take a look at that window, here it is you're looking at. So price is trading right on that level. It's actually 1 penny right now below that area. Now, what does that mean? That means if you fail that level of support, your next levels of support inside of the GDX would take you down to the 22.97 to 24.05 24.08 level, and that's that gap, and that's that day with 190 million shares out there. I do say you got to be careful out here. Why would I even say such a thing? Because the GDX had been going higher with less relative energy out there, and it gave you a nice little reversal candle, that little dark cloud cover right here. Let's go take a look at that. We'll pop this on the chart for you because it's a little bit easier to see how price was moving higher. You're doing it with less relative energy out here. Closing below that 25.40, 5-ish area, 24, 25, looks like 25.50. Not necessarily. It would suggest that we're going to see a pullback into that other gap that I gave you in the 22.97 to 24.08 area. Market profile wise, you can see it found resistance at its TAS weekly. Let's go ahead and see if we can put the daily profiles up on our screen for you. It'll be just a second to do that. Boy, wouldn't it nice to be just have one button to do that. And the answer is I don't have it. Now, from a daily profile perspective, it says could be problems in paradise if you see it close below 24.64 out there. That would suggest that 22.97 area would be its next stop. Now, that's inside the GDX. We see that we've got light volume out here inside the overall basket of equities. I don't expect that we would see anything different. If you go with one of the top 5 holdings, such as Gold Corp, it's got to be the message we see there, right? It's gapped. It had 14 million shares. Well, 6 million shares to the downside. Still light volume out here. But it does look like at this stage here, Gold Corp, the signal is that if it closes today below 1784, you're going to see 1716, maybe even a move down to about 1578 as its next move. That is in ticker symbol GG. We'll look at one more. Which one should we look at? I would go look at FCX, but that's going to require us to go take a look at the Aussie dollar, and I just don't feel like doing that. Let's take a look at Agnico Eagle. AEM, that probably isn't a good place to go either. Let's take a look at Barrick Gold. Just because Agnico Eagle is so strong. Barrick Gold, this looks pretty decent. Volume-wise, on the pullback today, 11 million shares, not even anywhere near the gap out here from the trading day of June 3rd. That had 30 million shares. So this one looks pretty decent. I believe that's also in the top five holdings of the GDX out there. Okay, let's go take a look at currencies, though. I just was too lazy. They want to go to another chart and go ahead and pull up the Aussie dollar. But let's go see what's going on with the euro. Let's take a look at the euro versus the U.S. dollar. Trading out right around the 112 level. Now, what the euro is doing, the euro is testing a rising price channel. So let's go ahead. Let's take a look at this. Edit, get rid of that. There we go. So now you've got a nice clean chart. You can see a nice clean rising price channel that began back in December of 2015. And at this stage, if price breaks below this level, it suggests that it would get back into the lows of May 30th around the 110 area. So you've got the euro pulling back. If you believe that the U.S. dollar is going to go to the upside, which I did not do the commitment of traders data work this weekend, just didn't have the time. It takes a lot of time to really analyze the U.S. dollar. I know what they were looking at last week, the week before, and the week before that, and when I saw what they were doing with gold, it already answered my question. So the commercial traders have positioned themselves, in essence, for the euro to find legs, whether it's right around here, longer-term-ish type legs out here. So they're anticipating the U.S. dollar index going higher. Now, what's that say for crude oil? What's that say for gold? I don't know. It just says that the U.S. dollar index is slated to move higher. Dow's off 84, S&P down 9. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the show, folks. Dow is off 91. S&P is down 10 points. We were taking a look at currencies before we went to that break. Let's look at a couple others. Let's look at the Japanese yen versus the U.S. dollar. This thing has been gaining strength out here. Right now, as we speak, it is trying to take on its swing point from May the 3rd. Of course, if we take a look at this, it's been in a fairly decent downtrend. Made a high out here back on June 15th, back in 2015. And ever since then, it's been making lower lows, lower highs out here. Let's put this on a, now if it breaks below that swing point, another A to B equals CD to the downside. But let's go ahead and take a look at a little bit longer term chart out here. Try to get a different feel for this currency pair. So let's go ahead and put the weekly time frame, see what that shows us. So there's that, one heck of a move, almost non-stop-ish from the lows back in 2012. So, there is certainly a timeout that is in order. Let's just look at retracements. Let's go all the way back here to the big old key reversal week back on October 31st, 2011, the week that began October 31st, 2011. So from that low to the high out here, which occurred again June, weekly chart began June 1st, 2015, it's actually only a 0.382 retracement. Does this mean this is where price stops? Not necessarily. If it does stop in this area, then you could easily have an A to B equals C to the upside, a gargantuan one, that's for sure. And if it fails to hold the support, and at this stage here, I don't have a clear vision, a clear idea of what it's going to do next. I know what to look for. No, I know that it would provide you and I with the signal. I don't see that signal just yet. If it fails to hold the support here, looking at it pull back to the 0.618 level, 94.78. So that's what's going on inside the Japanese yen. Let's go finish this off. Take a look at the Grexit currency, the Great British Pound out here. Now, the Great British Pound, this thing's been in a clear descending descending price channel, whatever you want to, since 2014, which is a beautiful thing. So, if you want to go over and grab a nice Guinness Stout, maybe some shepherd's pie. I'd say do the former versus the latter. Not that shepherd's pie is bad, but go with the Guinness Stout out here. What you're looking at is is a potential huge A to B equals CD to the downside. How huge could it be out here? Well, I'd have to first turn on my A to B equals CD tool. But let's go take a look at what that price projection gets us to. So on the longer term, there's your A point, your B point, April 2015. And if we take a look at the June 15th level, that would say that the pound could get pounded down to about $1.33. What else is at the, just got rid of that. So you can see if we take a look at the pound is actually trying to get back maybe to the 2009 level out here, which says you've got one heck of a consolidation pattern that would be in play. Now, the lows in 2009 were around the $1.40. Is that right? Give me a second here to grab it. To grab it, 135. Yeah, so about the 135 level. But again, that A to B equals CD, I don't know why it disappeared. It just did. It's playing with me. Yeah, I've got it somewhere right around there. It's not going to be exact, but that's okay. We're looking at this as a guideline in that 130. That says, so the A to B equals CD says, hey, you get below. Now, what we can't also see is that it's broken through that little rising trend line. So it says that price ought to get back and at least test the February lows of $1.38 out there. You break through those, and you're looking at that $1.33. You're looking at a test back in the 2009 level. That was the Great British Pound, which seems to be roiling these markets. As long as we're over there, let's go look at the DAX and the FTSE. Let's go take a look at the FTSE in the UK, see what it is doing out here. Now, it made its most recent high. Well, it made the most recent high back here in April 2015. This is a weekly chart. And in April of 2015, looked like this thing was going to be able to take out and really move higher because it got above its 2007 level. But this is really trading, well, it's trading weaker than New York Stock Exchange, but it's trading similarly to the New York Stock Exchange out here. Here's what we know about the FTSE as we speak right now. Closed at its session lows. Pretty good chance. Well, if we take a look at retracements and see where this thing is at, but pretty good chance that what the FTSE is trying to do is get back into that weekly swing point from February, began February 8th. Below the 0.382 retracement, wide-ranging bar, says 58.54 is next up. That should be able to do that tomorrow morning. Now, at that level, it's also going to be testing the high from February 8th, the week that began February 8th, out of the 58.40, what is it, 58.48 level out here. So we'll watch to see if there's any kind of rejection. That's what the weekly chart is showing us. The actual daily chart says you swing point wise, you get all the way back to the February levels between 54 and 5600-ish inside of the FTSE out there. Okay, we haven't looked at any individual stocks. Let's do that before we then start taking a look at it on an intraday basis, 30-minute, 120-minute equity futures contracts, if there's any types of signals out there. So let's go do this. Let's take a look. Let's stay in the beer mode out here. I haven't had a good beer in a long time. Let's say probably about, I don't know, I have to go look. Maybe it's nearing 3 months. In that 3-month period of time, but I won't say not because I haven't had beer, but they're down nearly 40 pounds out here. So the weight is staying off and the beer is staying out of my hand. Now, if we take a look at Stella, really Constellation Brands, they own it's kind of like just almost every beer on the planet, right? Except for Coors, I guess. I don't know, a few others, but shoot, for all I know, maybe they even bought out Coors. But if we take a look at this Stella had not Stella. Constellation Brands. I just see STZ. I just can't get it out of my head. It must be how badly I would like a Stella. But what we could take a look at Constellation Brands, STZ, broke out, nice gap up, big wide-ranging bar, even though it doesn't look like it, right? You see a gap. That truth is, folks, that's a wide-ranging bar. It doesn't get any wider when you get a nice gap. That was big volume, 4.1 million shares to the upside. Now, the bottom of the gap, which means the high of April 5th, was priced out at 152.28. That had volume of 2 million shares, but remember, it's really going against 4 million shares, and price pulled back with 3.6 million shares. To test that gap, it has since found support. Now we're seeing a fairly nice move in. What Stella, what Constellation Brands did, I'm going to have to stop looking at this chart. Actually, today, by gapping up, it actually broke a short-term descending trend line. What's that say? It says, hey, let's put our TAS profile, see if there's any tools that are out here. It broke above a daily, a weekly out here. Pretty much, it looks like Constellation Brands. How about that? I did it successfully. Headed back to the swing point from May 11th. 162 to 165.81. Looks like that is in the cards. Panera Bread, PNRA is the ticker symbol. Trading higher, nice little bullish engulfing candle today. This thing is going to try to get back into about the 185-ish type area. 185, what the heck am I talking about? It's going to try to get into the 216 level. 216 to 216. 216.61, 216.99 is very likely its next target. Now, volume today, only 195,000 shares, but pulling back kind of with, similar-ish type volume out there. So that's on Panera Bread. Stock chart looks pretty decent to me. If you pull back further, is there some problems in Panera? And the answer is no, doesn't look like it. So Panera Bread looks pretty good. I can say in losing the 40 pounds have definitely, I do mean definitely, not been inside Panera Bread. Have a request to go get some Mexican food at Chipotle. So for Mitch in Boston, we get back to this break. Let's go take a look at CMG, trading lower this morning with about 1.2 million shares. Steve Rhodes with TFNN. We'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 112. S&P is down 12. Composites down 26. We're going to take a look at Chipotle. CMG is the ticker symbol. And so we can see here, just as a first point of reference on our chart, we can see that price is below every TAS market profile that's out there. So this says the wrong side of the trade is the long side of the trade as we speak just yet. But the market profiles are lagging, not leading indicators. Unless you're trading in between them, then it gives you excellent levels of support and resistance. In this case here, you're outside of them, so they're not going to be able to call any kind of bottom in this case. So we're going to go ahead and turn that off. We can see that Chipotle has broken through a swing point. That swing point is right here, which had volume, and that was April 27th. That was at the 415 even Steven price point. Now, the volume there was 3.8 million shares. You closed below it. 3 trading sessions ago with 1.5 million shares with light volume out there. But, the volume doesn't control the world out here. You are also trading below a swing point from the trading session of it's just one of our tools, right? From the trading session here of January 12th, that had 1.6 million shares. You've done 1.2 million shares as we speak right now as it breaks through that swing point, and yesterday did 1.8. So 1.8 broke below 1.4. The answer here, because there was a question, has this bottomed yet? Actually, you broke through an important swing point with volume there, so I can't say, hey, one hand use the volume, the other hand don't use the volume. Use it how you'd wish. But at this stage here, you've broken through a level of support. Now, what potential is there that a bottom is forming, that somebody can be surfing around and looking? Well, you want to see a rejection of some price area. You can see, though, coming off of the high. Let me see if I did this correctly. Was that the high? Yeah, that's the high. So coming off of the high, it looks like the high was back on March the 4th. As price has marched downward, you can see that today, and actually was yesterday and the day before, you had gotten into that seventh inning wave, that seventh inning stretch. So there's always the possibility that it's trying to form a bottom. That's the only thing, well, you can see, that's the only thing I can see that would try to help answer that question. Because you're below a swing point, 2 swing points. You've got, let's take a look at the A to B equals CD, regardless of whether they had volume or not, what that price projection is. You need to see a price move above 417.56 today, by the way, in order for this to confirm that a bottom is in. But you could be looking at a price move that would take you back to somewhere around this area, which would be next move down, next price projection, 339.50, 304.82. Let's put a longer-term chart up here for CMG and see what it is doing out here. Now, this is a monthly chart. We can see here on the monthly chart that the trend has been broken. They're very close to it. Just depending on where you would draw your trend line, but not necessarily looking that great. The monthly chart, the swing that it's dealing with had 38 million shares. You're going to come in, what's today? June 14th. I don't know whether you're going to come in late or not, but that's a major important swing point out there. Forget about the day, forget about the daily and so forth. If price doesn't hold in this area, if it doesn't find a bottom soon, it looks like 233 and change would be where Chipotle, ticker symbol CMG, might be headed to. So, folks, with just a few short seconds to go, I am doing a workshop this evening. If you've ever been to one of my workshops, you know they're unforgettable. You know you will learn more in that 45 to 60 minutes than you could spend hours, many hours. Hundreds of hours to try to learn the same things I'm going to be able to teach you in that short period of time. So it's very easy. It's going to be a great course. Come on over to the homepage at TFNN.com. You got access to my newsletter service and me for the next 30 days. I'll help you understand not just those patterns, but other ones that we trade inside the newsletter. It's yours to test drive for 30 days, absolutely free. I look forward to seeing you this evening. Have a great Tuesday. It is Flag Day. Go fly your flag. And stay tuned. Our man, the polar bear, David White, will be up next. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.